Hello and Happy New Year. I hope you all are well. And I wanted to take a moment to walk you through some important updates that I'm making to the model portfolios. And this is around the latest market trends, where I believe the economy is going, and I'll talk through some of these as we go. So we're going to sell two different positions. The first one is in the oil and gas equipment services. IEZ is the ticker symbol. And the second one is emerging markets, which was the Crane shares emerging markets ex China. The reason why I want to reduce the overweight to oil is the Mid East tensions are quieted down, and when Mid East tensions spike, oil spikes and stocks go down, and so it was a nice hedge to give us some exposure to at the time a more growing economy as we were coming up out of COVID. Um, but it's no longer a concern. Syria's been going through its changes. Iran is back down, and so Israel's quieted down. It looks like we may have some sort of a release of some hostages, so less of a concern. And the second part of that is undoubtedly we're going to have deregulation or more deregulation from incoming President Trump, and the energy sector is going to benefit from these policies that encourage domestic and oil production. And so this increase is going to be additional supply in the market that may put a ceiling on energy prices. And the third is the U.S. is the economy of the world that's doing well now. China's sliding, Europe's in trouble. So when we look at that, we recognize there may be some softening in that. On the emerging markets front, the reason why I'm selling it is just in the broader emerging markets. It has already started and to come. As Trump puts in new tariffs, changes trade policy, it's going to put pressure on China's economy, which will in turn affect the other emerging markets around it that supply it with raw materials. The other piece of that is that there's this continuation in Trump's policies of a nationalistic thought process, putting a border around our country, so to speak, making the things we need, not relying upon others to supply us in times of need. And so we're going to see this continue ramp up in domestic manufacturing, which will again move jobs, move manufacturing from overseas back to the US. The two positions that we want to add, we want to overweight US financial services, and I'm using the IYG ETF. And I want to make a position in Crane shares, artificial intelligence and technology. The symbol is AGIX. So again, that theme of deregulation is going to pulse through our economy, and the financial services sector is primed to take advantage of that. We saw a bunch of movement in terms of a relaxing of conditions regarding bank balance sheets in the first administration. I think we're going to see a similar changes, but in the availability of private equity to be involved in 401k plans, so investors can invest in private equity and 401k plans. And so we've got a lot of things brewing in financials. And when we have interest rates where they are, we're still making a relatively good spread, which is how the banks make their money. And then finally, I'm going to be adding the Crane shares AGIX to capitalize on this AI-driven revolution. And if you're not using some form of AI, or if you're not using ChatGPT, I would encourage you to go and to try and to experiment. This AI revolution is going to continue to expand and accelerate. We don't know yet how companies are going to use AI to increase their profit margins. That's still a bit opaque, but the infrastructure that's being built out, the software that's being created, the energy sources that are being retapped is just incredible and will also add to our growing economy. So these trades are designed to position the models for growth while reducing some exposure to areas where we see declining potential. If you have any questions or would like to discuss this in more detail, please reach out. And I hope you have a great rest of the week and a continued Happy New Year.